All right, morning everyone. Welcome to another episode of Trading Bitcoin with your host Tone Vays, coming to you as the stock market has been open for about an hour, and stocks are in the middle of a really big rally that began, as I will show you in a minute, right at 10 a.m. And guess on what number on a 10-minute candle, which is one of my favorite time frames to look at when it comes to lower level time frames. So without further ado, let's go ahead and jump right into screen share. All right, so here we go. We have the 10-minute time frame on the S&P. We will begin today with the S&P and take it from there. As people come into the live chat, we're kicking off at about 200 live viewers. Here's the 10-minute chart. I was actually watching it this morning. I don't have my trading account open yet. I probably should have. I commented on this potential reversal right here at 10 a.m., though I did comment right midway through this candle as it was already rallying. This is our 10 a.m. time mark, and there was a 9 buy on a 10-minute scale. We had a beautiful reversal candle right on the 8, and the stock market is rebounding. I am still short in the S&P, but I don't like this. And if it goes any higher, I will be exiting this trade. I will be exiting this trade with a profit, but a very disappointing profit considering I shorted right at the top. And then I missed my exit down here and I doubled down here. And now I would have to exit if we hit my stop loss, which I moved, as you guys saw on the last video. The reason why this is disappointing is because I did not buy that much time in my options. I did not expect us to spend 10 days hovering over here. I really expected us to get down to that $2,800 area very, very quickly. So time decay is a problem for me right now on my options. I am considering rolling those options over and buying like 3 to 4 months of time, which is what I did with gold. That allowed me to stay patient, and I'm still long gold. I went long gold in this area here, but because I have all the way out till September and my option expirations on gold, I really don't have to worry about it till the end of July until my time decay starts to become an issue. And I am looking for gold to reach all-time highs. I'm looking for FOMO in gold as I'm looking for a crash in the stock market. The number of COVID cases is significantly increasing in the US. People are saying that it's even worse than what happened back in March or April, and it's just baffling that the S&P remains above 3,000. The amount of printing that the government is doing to me is insignificant. They are not printing enough to cause any kind of inflation. I still see deflation. The government would have to print trillions of dollars per day in order for me to actually be concerned about the printing. Printing during a crash does not concern me. It's the printing that there is when there is no crash. So all the printing that took place between 2012 and 2019, that printing causes problems. The printing that's happening right now, yes, it's propped up the stock market nicely, but that money did not actually go into the stock market. It's basically people anticipating the printing will eventually go into the stock market, but reality will set in. And I'm still a believer in reality. I still believe in somewhat efficient markets. And this is a horrible looking sign for the S&P 500. We are sitting here at a double bottom after a clearly lower high. This is the daily chart. If I go over to the weekly chart, we have what looks like a decent top, a decent secondary top. It missed it by quite enough, never closed this gap, and I believe we do have to pull back to at least 2,900. I believe that we'll at least pull back and close this gap, which we never fully did. We quasi did, but I'm sure there's gaps on a daily there as well. And I would be surprised if this week closed as a bullish week. I don't know if I can hold it throughout the week if it looks like a bullish week. So I do need today to close below this moving average on the weekly scale and whatever that corresponds to on the daily scale. So if the market doesn't pull back, I will be out of my trade. I'm actually going to be lowering the stop loss. I do want to leave it above 30.50. That's where it was before. I may have to pull it down to just above 30.40. So 30.41, 30.42 is good enough for me. I could always buy. I can always go short again if this thing does start to go up and it starts to reach this moving average, the yellow moving average that is turning to the downside. This is the daily scale chart. So I believe that's the 20-period moving average. If we do pull into that moving average on a daily scale, I think you could reverse from there. Problems will set in once we have depth crosses. I'm just going to double check these averages one more time. And we have, yep, 20, 50, 200. So when this 20 starts to cross this 50, actually that's the 50, and the 200, that's going to be a problem. But now you have a golden cross coming in. So you're going to have a golden cross between the 50 and the 200 as we get a mini depth cross with the 20 crossing below both of them. It's going to be a very interesting situation. The stock market is certainly acting very, very strange. We are continuing to rise here in the morning. Once again, this is a crazy rally. I can't explain these upswings in the market. Like I've been saying for weeks and probably before that, I cannot explain why the stock market is rising. I have been a stock market bull for as long as anyone ever watched me online. I've been a stock market bull since before I started doing YouTube, and I started doing YouTube around 2014, 2015. And I was a massive stock market bull before that. And I've been a bull only up until recently. So only recently did I become a stock market bear. And I am expecting lower prices in the S&P. I know everyone else is expecting lower prices in the S&P, but I don't care what other people think. I never did. I don't care what other people think in Bitcoin. I don't care what other people think in the stock market. I don't care what other people think in gold or oil. Speaking of oil, oil is just correlated with the stock market. So if the stock market does crash like I expect, so will oil, even though that's a chart of silver. They look almost the same right now. Here's the chart of oil. I'm expecting oil to dip low once the stock market turns. I am still expecting the stock market to turn. Right now, we are about to break this resistance zone. We are about to break out above these highs. And if we break out above these highs, it's probably time for me to exit my short trade. If we reverse right here off this candle and we go down and retrace all of this afternoon, all of this morning's gains, I will then continue with my bearish trade. All right, Bitcoin time. Let's go take a look. Didn't do a video yesterday, but I hope you guys watched the videos from PorkFest with Joe Saz. They were very good. We caught two. Well, he caught two very good falling knives because of the signals. And I will show you one more. We were watching it later that day, but obviously we weren't live and Joe wasn't near a computer, so he did not take the trade, but he really, really wanted to. And since now I have Trader, the Trader Pro installed and everything is good to go, so I can start showing you those signals. Yeah, those videos with Saz were really good. So here is my long-term view. We have a brand new week, and guess what it is? It's another week that got rejected by, this actually could be last week. That is actually last week's candle. We don't have this week's candle yet. So this week's candle would start fully below that Hyperwave Wave 7. Hyperwave is still calling for $1,000 price of Bitcoin. I don't know why people think that I am still waiting for 1,200 or 1,500. That is a ridiculous view. People seem to be very confused. And for some reason, people seem to be very upset that when I said Bitcoin has a high probability of going to 1,500, I said it when Bitcoin was here. I said it the first or second week of January of 2018 when Bitcoin was above 16,000. And Bitcoin fell down to 3,000, but people seem to be upset that they didn't get to buy it for 3 cents on the dollar. And that's your problem. That's not really my problem. Because while I was still skeptical of this bullish run, I became a full-blown bull right here. I mean, it was hard to catch, but on the next day, I was already buying at 4,500. Sure, I didn't buy it at 3,000, though I did, but I sold early. But the stuff that I was buying here, that's going to be a long-term hodl. I still have some of that GBTC position. I went back into GBTC, and I'm looking to buy a massive dip because I am still anticipating a dip, guys. Okay, so let's move on. Oh, and someone did the math. I was off by 12%. That was my margin of error. When I called 1,500 from here, from this area, I was only off by 12% on the low of the bear market. Now, like I said, I will admit that this run up, I didn't trust it. And I was right not to trust it because we retraced like 80% of that run up. But this run up, I did trust. Unfortunately, we ran into a bit of resistance that could hold us here for the rest of the year. Okay, so here's the live action look at the weekly scale. And now we have the weekly scale. We are pushing the bounds of the 1 to 4 candle correction. And this 1 to 4 candle correction is coming to an end this week. So if we continue to fall into next week, I would now be expecting this to not just be a correction, but to be something a lot deeper than that. What's my worst case scenario? My worst case scenario is approximately $7,000. I just don't see Bitcoin falling further than 7,000. To me, 7,000 is the perfect buy the dip situation. So I become a big buyer at 7,000 if we get there. We may not get to 7,000. If we don't get to 7,000, where do I become a big buyer? If we don't get to 7,000, I become a big buyer above 10,000. It's very unlikely I become a big buyer somewhere in between. It's possible, but it's unlikely. I will either wait for 7 or I will wait for 10. I may get my 7 later this summer. I may not get my 10 until, I don't know, April of next year. I have no idea. But those are my levels. However, though there could be a lower level. If we keep falling down to 8,000, I will probably lower my buy from 10,000 to 9,000 because then we would be breaking this particular trend line at a much lower area. But everything has a catch to it. If we fall low enough to say 7,700, this Fibonacci line, and over the next 7-8 weeks, and then we rally into this $9,000 area, $8,800 area trend line in, say, October, what do you think I'm going to expect? I'm going to expect us to once again get rejected by this line and fall back down to 7,000 again. So I wouldn't be just a blind buyer at 9. I will basically be repeating everything I've been saying for the last 2 months. Prove to me that you're ready to break this line. So if it proves to me and it now consolidates at 9,400 all throughout October and November, I will then be convinced that this trend line is broken. Until then, it'll just be another rejection. So right now, the weekly chart, while leaning bearish, has not given you a signal to go into any short trades. What scenario on the next big run from here up will not cause another 80% drop again? A slow run up, a slow grind up. So for example, if we don't break 10,000 until the second half of 2021, and then we don't break 20,000 until, I don't know, midway through 2022, and then we don't break 30,000 until around the halving of next year, that might, the halving like 2 years later or a year and a half later, that might avoid an 80% drop. As long as you're not doubling within a few weeks. Like look at this. Here we went from 4,000 up to 5.5 within a week. And then 4 weeks later, we were all the way at 7. So if you double in a matter of a few months, you're going to fall 80%. But if you go up slow and steady, you're fine. You're fine for a while. So Bitcoin was doing great all throughout 2016. Look, we doubled, but it took a year. And then that was a problem. So here, 2016, the price in 2016 was like 450. And then we were going into 2017 at like 700 right here. So that's a doubling, 800. That's a doubling that took 1 year. If we double in 1 year, we're okay. But here, we went 20x in 1 year. That's a problem. And that had to have an 80+% correction. Slower you go up, the lower your chances are of a catastrophic crash. You want things to go up slow and steady. All right, let's go back to the S&P. The S&P is still rallying. I was looking for this candle to be a reversal candle. It wasn't. At this point, I am waiting for like 11 a.m. and maybe it will reverse. If we break the swing high, I would consider my position to be very, very concerning. I have a short position that I'm no longer comfortable in if we break that line. Breaking that line causes me to strongly end this video and get out of my short position. So I'll be watching it. The moment we break that line, this video ends. Otherwise, I can go as long as an hour. Because I need to open my trading account. I need to get out of my short. That's my break-even line. Sorry, that's my stop-loss line. My break-even is further up. I've spent a lot of time and a lot of money on this trade, and I'm not going to let this trade lose me money. That's really, really important. To me, there's rule number, well, it's actually rule number 3. Don't lose money. The reason why it's rule number 3, because if you don't risk any money, you can't make any money. So therefore, rule number 3 is don't let your winning positions lose your money. I talk about all this in these workshops. I've turned my workshops down to, well, there'll be a third one. There'll be one about the indicator, which I'm actually trying to come up with a name for it. I am gonna have my own indicator at this point. We're not gonna like the whole confusion with the time to mark indicators and what I do, and I just don't want that confusion. Those that are interested in time to marks indicators can go use that, and I'm gonna have my own. So I am working on code that would look actually pretty different, but obviously it would be momentum and time based in a similar way. It'll just avoid confusion, because when people email me and ask me for, time to mark code, I'm like, well, that's not what I have. And we have to eliminate that confusion. Okay. So these courses will take place July 11th and July 25th. They are webinars, and once they're done, they will go and become my new on demand. So one of them will replace this one, and the other one will replace risk, position size, and leverage management, and entries, exits, and stop losses. Those that just want to support, feel free to use the affiliate page. No exchanges on here for the time being. I took those down months ago. So all you have is Embly card if you want to spend your Bitcoin. I probably should change that to a Visa logo now. And, 3 commas for social trading and trader. Speaking of trader, so I have it set up, spent some time with Joe Saz, and we set me up on trader. So as you can see right here, based on the overlay that Joe uses, there was no buy signal here at the low. Not every signal is perfect, but this is a 5-minute scale. And let me go back and show you something. So when we did the video the other day, let me go to Bitcoin. I didn't even talk about Bitcoin on a daily scale. Here's Bitcoin on a daily scale. We have clearly broke this triangle. Like I've been saying, I'm not fully comfortable with this triangle. I don't like drawing these triangles on the back end of a consolidation. Now, look at the counts here. We're only on 6, so there is still some downside to go. Or, of course, Bitcoin is fully correlated with the stock market, in my opinion. And if the stock market is rallying, Bitcoin is rallying. But if the stock market does drop hard, which it doesn't look like it's doing, I'm sorry, guys, I got to end the video. Like I said, I'm going to stick to my word. You got about 30 seconds. I don't like this. I got to exit my short. So this is where my short ends, and I got to end the video. So here's the daily scale. Daily scale is bearish to me. Here's the 4-hour chart. I drew this giant red line on the 4-hour chart. And I expected Bitcoin to break down once we broke, once we broke this line. Expected Bitcoin to break down once we broke this line, and it did. Went all the way down to 88. I said on my video that I fully expected Bitcoin to fall below 9,000 this weekend. It did. It rallied back up, but now it's down below this line again. But since Bitcoin is correlated with the stock market, then if the stock market's rising, and unfortunately, I got to get going. I can't get to your questions. This is the problem that you get when Vays trades and tries to do videos. I like doing these videos during market open, but if I have positions on, that's what happens. So either I got to stop making trades, and I'm not going to show you my account. That's none of your business, especially the trolls that continue to watch this. I think more people watch these videos that don't like me than actually like me. That's why I get a million troll comments. All right, guys, I'm sorry. I got to cut this video short. I'm going to stop the, oh, my camera wasn't on. I'm going to stop the video. Hope you enjoyed that. And hopefully tomorrow, if I don't have over leveraged, very risky positions on the S&P, I can spend some more time with you. Talk to you all on the next one. Bye.